Okay, so my name is Dean Thomas. I've been selling real estate since 1979. And some of the longevity I have in my career is I work with residential property owners and I work with real estate investors. And at the beginning of my career, I'm going to say over the first 15 years, 12 years, it was mostly residential property owners. And some of the residential property owners that I was working with started investing in real estate, and we started digging into investment real estate. And over the years, now I've been involved with several projects. There's a very simple way to analyze real estate investments, and when you're analyzing them, if you have a system for the analyzation, it will make it'll give you a quick way to review a property and see if the property has value. Eric, go to the next slide, would you? I'm with my partner, Eric Claudio here. He's running the internet portion of it. So we're going to do our best to get through here. So we own eReal Estate Corporation, Value Mortgage, and South Bay Development. eReal Estate Corporation represents property owners, represents our investors. And by the way, there's agents on Zoom right now. There's also past clients of mine, and there's other property owners on here that I've never met before. So I'm going to cover in a general way how to analyze a real estate investment, flip, or new development, and the processes to go through that. Currently, we have 9 new developments going on in LA County. They are ranging from Manhattan Beach, Hermosa Redondo Beach, Palos Verdes, and in the Torrance and Harbor City area. Okay, let's go to the next slide, Aaron. When I find a good real estate investment, my goal is always to bring it to my clients. Sometimes we purchase them ourselves, but usually our goal is to bring the investments to our clients because I'm in the real estate business to sell real estate. Yes, I do buy some of the property sometimes when it's a creative project. We're doing a little historical boutique in Hermosa Beach right now. That's been a very interesting project to work on. But when you find a good investment, what do you do after you find the investment? So we're going to go through some of this conversation today. And if you're an investor and a realtor brings you an investment, what should you do? Or when an investment is brought to you? And then again, if you're a broker and you're representing investors, what do they deserve and what do I provide to my client? So we're going to go over those types of things. Okay, so if a good investment comes across my desk, I'm going to give you an example. There was a property in Nob Hill and Redondo Beach that came on the market last week. Very good development property. There's multiple offers in the property. It's a profitable development project, and our client put an offer on it. I don't know if we're going to get it or not, but what I did when I saw that property is I immediately drove over to the property, walked the property on the outside, did a financial analysis on what it'll cost to build, and did a financial analysis of what I could sell it for. And the numbers added up. So we submitted an offer on the property that day to close escrow in 15 days. So now when I say I brought this to my client. I provided this information to my client so they can look at it in a matter of 3 or 4 minutes, maybe 5, and decide whether this is a project that they would be interested in or not. And after I sent them the information, literally within 20 minutes, there was an offer sent. And this is the way investors are. If you put together a good investment, the investor will buy the property. And if you have a few investors, you'll sell multiple properties over time. But you have to be able to give your client and provide information that shows why the transaction or why the investment is a good investment. I'm going to give you an example. A lot of people know that our company, South Bay Development, buys real estate and can close escrow very quickly. I get calls all the time, text messages all the time, something like this. There's a good buy, and they send me an address. And I'm like, how do I know this is a good buy? I mean, what am I supposed to do with this address? Go do all the research? Well, if somebody's going to be bringing me an investment property, they should have already. Uh-oh. Sorry about that. I had a call come in. If somebody's going to bring me an investment property, they should show me why it is a good investment. They should provide information that's easy to understand, that I can analyze quickly, and provide, that's good, and provide realistic, comparable analysis, financial summaries, etc. So we'll go into this a little bit. Go on to the next slide. Okay, so this right here is an Excel spreadsheet that I utilize for flips and residential development. It could be utilized for office condos, and it could be utilized for condominium projects. Now, what's interesting is there's a question all the time. People will ask, how much does it cost to build? Right? And that question is a very, very difficult answer. So for a moment, I use this example of $220 a foot. Eric, go to the next slide for a moment. And I use $250 a foot. Right? So when we're using, go back to the $220 a foot, lumber has gone up 50% in the last 12 months. So if you entered into escrow on a property, planning on building a new home or townhomes for development, you may not have projected that lumber was going to go up 50% and that drywall was going to go up 35%. And then we also have the COVID, so there's an interesting labor pool, et cetera, et cetera. So and then is the property flat? Is the property sloped? So when you're giving your clients spreadsheets, for me as a realtor, these are simple analysis for me. It's for the client can adjust the numbers. They can increase the number to 300 a foot. They can put in 330 a foot. They can flip the sales prices. So these are spreadsheets that we create that are user-friendly for the client. Now, in this scenario right here, it's a 2-on-a-lot townhome. They're 2,800 square feet each. The estimation to build was $220 a foot. There's probably a bunch of people saying you can't build for $220 a foot. Maybe you can't, maybe you can. We also have a sheet that says $250 a foot behind it, and we can put one in that says $300 a foot. So we know that that number is a number that can be a variation. Okay, that being said, if it was $220 a foot, and if you purchase the property for $1,135,000, and if the units were 2,800 square foot each, after sales fees and commissions and closing costs, this project would net at $1,750,000 a unit. This is a 2-unit project, $993,000. If they sold for $1,850,000 each, it would net $1,183,000. Now, if it sold for $1,950,000 each, they would have netted $1,374,000. So in this particular project, 2 different variables happened. One, the cost per square foot was higher. So go to the next slide, Eric. The cost per square foot was more in this range. This project actually closed escrow about 8 months ago. So the cost per square foot was this range, and the sales price was the middle estimate. So the profits to the developer were approximately $1 million. Now, these types of developments are developments that I've been pursuing for the last 30 years. My company, South Bay Development, LLC, you can go on to southbaydevelopmentllc.com and you can see some of the 50 homes that we've built in the past. So we have a pretty good idea of what we're talking about when it comes to the building cost. Now, I'm going to say that $250 a foot is a pretty low number to build right now, because as I just said before, these were analysis at a construction project that took place and was completed about 10 months ago. So those numbers have changed today. It's more expensive to build right now than it was 10 months ago. So let's make that a clear situation. I'm going to give another analysis. Go to the next slide, Eric. There's a 2-unit project in Hermosa Beach. Now, cost per square foot to build, how big are the units, risk factor, the amount of money tied up, everything comes into play here. So in this situation, I used a number of $300 a foot. And I used a sales price of 2.5, 2,650,000, and 2,750,000. At $300 a foot, if the units are 3,200 square feet, all into this project, it would be $3,915,000. So then you have your cost to sell, real estate commissions, escrow fee, title fee, etc. And your net proceeds of the 2.5 million is 835,000. So at 2,650,000 per unit, which is what I believe they'll sell for, the profits would be 1,120,000. Now let's go to the next spreadsheet, because this analysis is at $350 a foot. It's the same property, same development, same analysis at $350 a foot. And at $350 a foot, these would be the profits and proceeds on a development project. These are the types of development projects that we work on often. Now, pretty interestingly enough, there's an interesting conversation that the higher the sales price in the community that you're going to build in, the higher the resale price. Well, that means the more you're paying for the land, and you're going to be paying a higher cost per construction, because a home that sells for $1 million or $1.2 million is going to have different finishes than a home that sells for $4 million or $5 million. Right? It's going to be double if it's just a much higher quality is expected on something like that. And then in the same analysis, you could use this for flip properties. Right now, I have another Excel spreadsheet further in the presentation that's going to show you how to do an analysis on the entire project. So Eric, let's go to the next slide. Okay. This and any of these forms, if somebody would like a live form, if you're one of my clients that are online right now and you'd like me to send this to you, or if you're a broker or a property owner, I'm happy to send you working spreadsheets so you can have in your possession, so you could do your own analysis. This right here is an in-house spreadsheet. It says presented by Dean Thomas at eReal Estate Corporation, but this is actually a spreadsheet that we use at South Bay Development. And there's about 100 different line items on this spreadsheet, actually 110 if you see the whole thing. And it has every line item, hopefully every line item, that you can expect to have on your development project. Now, on the boutique inn that we dealt with, there was a few things that we didn't have in our line item. We didn't plan on working with historical consultants. We didn't plan on working with CEQA, which is a California agency that's called California Environmental Quality Act. And we did plan on working with Coastal Commission, so we did have that line item in there. But there was a couple of curveballs that weren't in there. And in this spreadsheet, we have a line item that's called Contingency Fund. And the Contingency Fund, you should usually put, I would say, 5 to 7%. To be extremely safe, put 10%. But we usually put 5% in the Contingency Fund number. So if there's a unexpected situation that comes up, hopefully we'll have enough money in the Contingency Fund so we don't have to have our clients or ourselves or the property owners come out of pocket with more money. So this is a very helpful sheet. It's something that I've been using for at least 2 decades, and you shouldn't miss anything if you use this as a breakdown analysis for what you're going to do on a project. Okay, let's go to the next slide. Okay, so if I was bringing to you a development property, what I would have sent you was, and Eric, I'm gonna have you flip back. It would have been in this order, and you would be able to actually review it this quick. Let's go to the Redondo Beach property, Eric.
The analysis?
Yep, the Redondo Beach analysis. Okay, you would have received, as my client, one analysis that says 220 a foot, one analysis that says 250 a foot. Then I would have sent you the Excel spreadsheet, flip to that, the 100-page sheet, for you to be able to do your own due diligence if you didn't have one, to get an idea of what's going to be involved in your project, whether it's a new development or a flip. I would send this to you so you make sure your costs are covered. And you go to the next sheet. Then I would comps. Then I would send you updated comparables to show you why I am suggesting. And again, I use this same analysis for myself. So I have to prove to myself that I can sell it for what I think I can sell it for. There's no guesstimating in this business. It's either happened or it hasn't. Now, the highest quality development always wins, right? When there's 7 or 8 homes out there, it's location, and it's quality. And some people think that buyers aren't really paying attention to the quality. They are. And the builders that put in the highest quality usually sell their homes for the highest cost per square foot. Okay, I gave us, I showed you the Hermosa Beach project in this presentation at $300 and $350 a foot. And I stated that they would sell for between 2.5 and 2,750,000. So where did I get that information? I went to real-time data that is no more than 6 months old. And if I had to open the window to look back to 12 months because there wasn't enough data, then I would have opened the window and looked 12 months back. In this situation, there was 11 comparables that have sold in Hermosa Beach within 6 square blocks that, excuse me 1 second, within 6 square blocks that have all sold for over 2.5 million. So when I'm saying that this property on this example property I'm using, which is a development opportunity, by the way, that could be available. But as I'm using this project, this is the proof. I've walked through all these properties. I see for myself how much these will sell for. The important thing is how much can I build it for and how much can I buy the property for? Because that's the end result where the profits are. So you're going to give your clients a line item, a single line item that shows them how many days the product was on the market. It shows them how much the property sold for per square foot, the lot size, date of transaction, etc. Okay, let's go to the next slide. Okay, now when we're looking at investment projects, we have to really, before I send my client to a property, I'm going to step back for a minute. It's not real good to have, ever for any of us to have mud on your face. So if you don't go drive by the property and look at the property and look at the big picture before you tell your client about the property, what's going to end up happening is you're going to end up frustrating your client, right? It's if you want to be a valued executive presenter of investments real estate, you need to go look at the property, stand in front of it, and look at the big picture here. So sometimes, prior to me having a little bit more experience, I would give somebody an address, and I wouldn't go look at the property. And they call. It only took once for them to call me up and say, "Why would you send me there?" Now, the fortunate thing is this was over 30 years ago. He said, "Why would you send me there?" And I didn't know what they were talking about. The price of the property was a low price. So I drove over there. And the neighboring property had graffiti all over it. It was boarded up. It was a mess. And it was going to stay a mess. And, a light went on to me. Don't ever tell one of my investors about a property unless I've seen it. Now, there's an exception to the rule. If I had a 100-unit apartment building come on the market in San Bernardino or in San Fernando Valley, I would send that to my client without driving to San Fernando Valley, because he would analyze the numbers, and the numbers are either going to make sense or they're not going to make sense. So there's not a need for me to drive up there. If he says, "Dean, let's meet up there," or "Dean, go drive by it and check out some things," certainly I would do that. But other than that, I'm going to go drive by the property and look at it. So just the location of the property, make sure there's nothing negative around it. Will the project have an effect on the local neighbors? Will there be any government problems with it? Any business problems with it? You want to make sure that the community is behind whatever you do, whether it's residential or whatever you do. Just make sure that all the guidelines are being followed. And then you have to look at, what is there to lose on the project? How can you lose, right? Nobody wants to lose on an investment real estate transaction. And I'm going to say, fortunately, this is a true statement. None of my clients, none over 35 years have lost any money on a real estate investment that I've sold them. Absolutely not. So if one has, I'd like to, there just isn't one. So, but this is because I look at the project and say, how can we lose? And if the answer is you can lose like this, or you can lose like this, or like this, if it's obvious that there's possibilities that you can lose, then that's something you don't want to be involved with. If all arrows point to this works, then you do it, because people make good money in real estate. Okay, we talked about logistics. Okay, how will it affect traffic? Right, this is an interesting conversation. And when I bring this up, it's like, if you're on a corner and there's a busy street by, you might have to have traffic engineers work the property for the entire development. Traffic engineers are not expensive. And if you need to have it for a 9-month period, I don't even think the contingency of 5% would cover a traffic engineer. Those are the guys that are standing out there with the flags guiding traffic. Are there any environmental issues? There was one property that was purchased not by us, but by another developer in Redondo Beach, interestingly enough. And there was soil contamination from oil. And it was interesting because there was new developments all around the property. You would never expect that. But after they closed escrow, they did the soils report and found out there was soil contamination. So they had to dig 8 feet deep, bring new dirt in and compact it and all that type of stuff. There used to be oil wells in Redondo Beach, so that's where it came from. A soils report can be completed in about 10 days, 7 to 10 days. So if you're going to do a new development and tear down the house inspection isn't nearly as important as the soils inspection. Okay, is the property a historical landmark, or has it been designated as a possible historical property by the city? Most cities have a list of all of the potential historical property designations. So I'm just going to use Redondo Beach as an example. Their building department has a list of their properties, all of the properties in Redondo Beach, rated A, B, C, and D. If it's an A or B property, you have to have a historical report on the property to be able to tear it down. It doesn't mean that it is a historical property. It means that there needs to be a historical report completed prior to you getting permission to tear it down. That's for an A and B property. If it's a C or D property, you do not have to do a historical report in Redondo Beach. It's only the ones that are A and B. All the different cities are different, but you want to make sure that if you're standing on a property and it may have some historical integrity or something like that, that you confirm whether a historical report is needed or not. Okay, go to the next slide, Eric. Every city has their own website for community development, for zoning development. These are the city planning websites if you want information for Redondo, Hermosa, Manhattan Beach, or Torrance. All cities have them. They're very efficient these days. The cities have made Zoom communication very efficient these days. So if you want to talk to your local city planner, don't just go walk down there and expect to walk in the gate, walk in the front door under the COVID conditions still. But if you send an email down to the department, it's been my experience, they get back to you rather quickly. And things are still moving along. But even, if you can imagine this, if it was prior to March of last year, if we had a new development project and we were going to submit the plans, we would walk into the city with 4 sets of plans, 4 soils reports and surveys. We'd fill out an application. We'd go to the Treasury Department and you'd write a check for the submission of your plans. That system is completely changed. Completely changed. So I'm not going to go into exactly how the system is. I'm very familiar with it from Redondo, Hermosa, Manhattan, Palos Verdes, but you don't just walk into the city halls anymore. And I'm hoping that it changes soon. But I don't see it changing anytime in the near future. So this means that a plan that normally would have taken 5 or 6 months to get through the city now may take longer. So just keep that in mind. There's different protocols for all the different communities. Okay, let's go to the next slide, Eric. This is going back to providing the investor or providing yourself as much information as you can on the property. This gives, as far as the county is concerned, the actual bedroom count, the square footage, the lot size, and the previous sales price. Now, I sold a property in Rancho Palos Verdes where the actual home was 5,200 square feet, but the record showed 3,900 square feet. And it was real clear. Let me see the next slide for a moment here. Okay, go back to the previous one. So it was real clear that this was the documentation, the preliminary title report said 3,900 square feet. But the appraiser said 5,200 square feet. And again, the home was built in the late 80s. You can easily see that there were no additions, that there were no illegal, unpermitted rooms. It was a beautiful home. What happens is the cities charge on a per square foot basis on most stuff, school fees, city tax, so on and so forth. So we're not pointing the fingers at anybody, and I'm not giving the address, but certainly that 3,900 square feet that was on all public records was inaccurate. So they went through a process with the city of Rancho Palos Verdes. If it was 100 or 200 square feet, oh, it's probably not a conversation. It's probably a closet or something that was counted. But when you're talking about 1,200 square feet, you want the record to be right. So the client paid a small fee to the city, or maybe they didn't think it was small, but they paid a fee to the city. The city came out with their inspectors, with their team, if you will, and recognized that there was a mistake and charged the client the difference in what the fees would have been if the record was accurate, and then they fixed the record. So that was a rare situation, but it was a situation. So we can only get as much data as we can. And this was a pleasant surprise for them because they got an extra 1,200 square feet on the records of their home. Okay, go to the next slide. Now, you want to have aerial visions of the property so you can understand what's going on the entire block. Whenever we do a development property, we actually put all the neighboring property owners in our file. If we're doing a flip, we put something in our file in the event we need to be able to contact one of the neighbors to talk about any situation. If we're going to make some noise, we always want to make the neighbors happy. So try to be as cordial as you can to your neighbors when you're doing a development in flips. It seems to pay off in the long run. At least that's been my experience. Okay, go to the next one. I'm not going to go much more into this right here. If you went into the city or county website, you would see something like this. On this particular page on the left, that's a Redondo Beach R2 and R3 district explanation, saying what you can build on an R2 and R3 lot. Interestingly enough, communities like Lomita and Lawndale, they don't operate like that. So in Hermosa, Redondo, Manhattan, you can pretty much figure out what you can build. But other communities, they do it different. They do it differently. I'm hoping they start setting better standards in the way they do it, because some of these communities, I'm going to say like Lawndale and possibly Lomita, have been held back on their development because a property owner or a developer doesn't precisely know what they can build on the property. It's a moving target in a couple of these communities. Therefore, developers don't go invest in those communities. And that's why you don't see them move forward like they probably should. Okay, now in this regard, let me spend a minute and talk about an email that came out to me 4 days ago from one of my good clients. Thank you, Mr. Scalar. It talked about the new 2021 SB 50 and SB 9 legislation that will allow 8-unit developments on all single-family lots. Now, I've been reading through this over the last 24, 48 hours. People may not like this. Some people may like it. Cities will fight it. Some cities will embrace it. I've already spoke to a city that is embracing this policy. It's a community that I enjoy doing business in. And I'm not going to give too much information out about it because it's for my investors or our agents to use the strategy. But if you call me about it and want to talk to me about it, or want me to send you information, if you're one of my clients on this Zoom call right now, or you're one of the clients that will watch this on a video in the future, I will be emailing this to you just so you have the information. But basically, some communities, there was the ADU laws that were passed down. And some, though that means accessory dwelling units. Some communities embraced the accessory dwelling unit laws. Some people fought them. The cities that fought them lost. They didn't lose entirely. They gave a give and take, but in all of the local communities now, you can add an extra unit on your property if it's zoned R1. I've personally been to Redondo, Hermosa, Manhattan Beach, Rancho Palos Verdes Estates, Rolling Hills, Torrance, San Pedro, and Long Beach. So I can talk with all of those planning departments and find out which one of them's, or not, excuse that expression, find out what their guidelines and what their policies are in reference to the new California laws. One of the communities are very, very progressive in implementing these laws. It's a very nice community. There's going to be some tremendous investment opportunities up there. If you can picture buying a property for $700,000 or $800,000 and building 8 units on it, and the cost to build the 8 units and what the monthly income will be, that's a simple development project. And if the community is going to embrace it, we're going to try to put as many up as we can in that community, because we want to assist in the housing situation that's happening right now in California, especially Southern California. So if you want to have any more information about the Livable California Community Equity Act, please call me up and I'm happy to give you more information about that. Okay, let's go to the next thing here. I mentioned about going to a project. If you're doing a flip or you're doing a new development, again, as you're sitting there looking at the property, you have to observe it from the outside of the property to look at what possible hurdles can be in the way. Now, this is a project, a 2-unit development site that one of my clients completed over on Lucia and Diamond in Redondo Beach. It's a corner lot. They built 2 detached townhomes. The garages can only go in certain places, period. There was a telephone pole guideline that blocked where the garage was going to go. So you either had to figure out there was also a drain line on the corner and a city bus stop on the corner. All of those notes right here.
Unknown caller.
Sorry about that. I didn't turn off my phone. A couple things going on here in the office. Sorry about that. Okay. All of these items, I stood in front of this property and I was bringing it to one of my developer clients, I should say. And I let them know in advance that there was a slight problem, and I gave them a solution. So on the electric pole, it had a cable that was at a slant that was holding the pole up. You can actually do a 90-degree, did it again. You could actually do a 90-degree cable to hold that telephone pole up, and or to hold that, sorry, but it was a little sidetrack. You could actually take that angle guideline and you could take a 90-degree, it's called, I don't want to say Lazy Susan, it's called a lazy something, and do a 90-degree shape and hold the electric pole up with that system, which would enable us to get the driveway in. So during our due diligence period, we had the Edison company come out to the property to confirm with us that there was a viable solution to get rid of that cable, the guide wire cable, because if we couldn't get rid of the guide wire cable, then you couldn't build 2 here. There was nowhere to put the second garage. So Edison said, yes, they'll work with us on it. And we got through that hurdle. But these are the kind of things, if you buy a property and close escrow and you're not looking at the entire picture, right? The global picture, and then you buy something and you can't actually develop on it, that becomes a problem. So, South Bay Development, my development company, we do consulting with people. If there's any issues like that, we're happy to help out with that. But more importantly, if I'm bringing you a development property, or if I'm bringing you a property to do a flip on, at least you know that we're thinking all of these things through. Or at least we're doing our best to think all of these things through. The last thing I want to do is have one of my clients contact me and say, Dean, I can't do what you said I can do on the property I purchased. Right. So, anyways, just keeping your eye open on the whole picture there. Okay, let's go to the next thing. Okay, I want to talk about the development process. I have a little slide here that's development made simple, and this has to do with a flip, and it also has to do with a new development site. You're going to demo. There's recycling requirements now. When I first started building in 1998, there was no recycling rules. You brought the tractor to the property, you tore it down, and you brought the material to the dump. Now there's a deposit that you have to leave with the city, and you have to sort your demolition recycling material and make sure that it's all sent to the right places and deposited properly. Then you show the receipts back to the city and you get reimbursed the demolition recycling fee. That's how they track whether people are recycling or not. If you're doing a new project, there's going to be grading and soils. If you're doing a flip, there's probably going to be landscaping in backyard. You could go both ways on that. You're going to do foundations, any foundation securing. You're going to do your plumbing and roofs. You'll do your framing. If it's a flip and you're going to add 600 square feet, you're going to frame it out. If it's a new home, you're going to put your foundations down, frame it out. Then you'll do your roofs, your electrical, plumbing, fire sprinklers if necessary, HVAC, low voltage, etc. After you have all the rough sign-offs, you can then you can install your drywall and apply your roof. You cannot install drywall until all of the rough subcontractors, all the rough work is completed. Once you get the rough signed off, you can begin the drywall, begin the roofing, set the finishes, and the inspector will come back and give the final sign off. Now, interestingly enough, different cities are doing inspections differently right now. Some people are doing them by FaceTime. I've done a city inspection on a couple of properties right down the street here, where the developer has their phone on, they're walking the property, the inspector is telling them where to go, letting them see it. So that's something that I haven't seen in my career, but real estate is changing. Even like today, I'm communicating with 20 people right now in this meeting. The series we did last month about the evolution of real estate over the last 5 decades, that ended up being watched by 4,800 people. So communication, everything's being done a little bit differently right now, including city and county inspections and submissions. Okay, let's go to the next page. You want to understand city processes when you're about to do something on your property. Normally, the process would be, I'm going to do due diligence before I bring it to my client. If my client thinks the property is a sound financial investment, then they will end up talking to their architect or talking to, doing their research, confirming the information is accurate that I'm showing them, or, if whatever they need to do their due diligence. Then you set up a meeting with the architect. And if it's a flip, or if it's you don't actually need an architect, you could use a designer as well. But you set up a meeting and go through the details of what you want to accomplish. The architect will put a sample together. Once you approve the sample, you submit it to the city. You submit it to the engineer. When the city says, okay, we like the plan, the engineer will provide the structurals. You get the city approval. Then the property becomes permit ready. Usually you have 2 years to start a construction project after it's permit ready. So it used to take 4 to 6 months to get a project through the city. It takes longer now because of the COVID situation. However, once the property is permit ready, you usually have 2 months from then to start construction. Now, in order to pull a permit, if you're doing new development or if you're doing additions, all cities are different, but expect to pay a little bit of school fees, expect to pay some park fees, expect to pay some recycling fees. There's Department of Water and Power, there's county fees, there's city fees, there's demo fees that are not part of the demo, and there's building permit fees and building plan check fees. So if you're going to be doing a new development, make sure you have a clear understanding of what those fees are. And then when we go down back to, and you say, a person says, what was the cost of construction? These fees that I have here are called soft cost, right? And on the soft cost, it's good stuff. These are soft costs. So do you include the soft cost with the hard cost on the cost of construction? That's a whole different equation right there. I would say yes, if I want to know the actual cost of construction, that should include everything. But your contractor may be saying, no, the cost of construction is just my cost to construct. And all of these other fees are on top of the cost of construction. So the Excel spreadsheet that I provided in the previous page has all of these items included, so you don't miss any of the items. All right, let's go to the next page. Okay, there's other potential issues or problems or cost to be aware of. So I thought I'd put them out for a minute. One of them is curb cuts. There was a property that came on the market on Nob Hill a couple of days ago. I'm sorry. Pacific Coast, get it straight, Thomas, on Ruby Street, on the corner of Ruby and Broadway. It looked like it was a phenomenal buy. Nice corner lot, 2 on a lot townhome site. Turns out the city of Redondo Beach will not allow a curb cut on Ruby. So you cannot bring a driveway off of Ruby. You can only bring the driveway off of Broadway. Well, that creates a problem because the lot's only 90 feet deep. And it's impossible to do the proper legal turning radius if you have a common driveway on that type of lot. Either that or your buildings are going to be very, very small. If the city allowed a curb cut on Ruby, you would have a corner lot with one driveway coming off of Broadway and one driveway coming off of Ruby, and there's both of your accesses to the garage. This property is west of Pacific Coast Highway. Coastal Commission does not want to lose street parking in any situation. So Redondo Beach and Coastal Commission both will not allow you to do a curb cut here. So we were going to submit an offer on this property, but because of this situation, and good thing we noticed in advance, I'm going to say there could be more novice investors that would have bought the property because it looks good, right? And then after they owned it, they would have found out they can't do a curb cut and they'd have a problem. You're going to look at lot slope. So let's think about this for a minute. You're in Palos Verdes. You got a beautiful, beautiful Queen's Necklace view. You just have to build on a slope that's about 45 degrees, right? That's tremendously expensive to do. Let's say you're in Redondo Beach and you've got a mild slope on a property, high in the front, low in the back. That needs sump pumps for each home. It needs drain pits. It needs several things that a property that's high in the back and low on the front, in which sewer and water would go down by gravity. It doesn't have to be pumped out. And then the lot that's high in the front, low in the back is probably going to need some retaining walls, right? So there's a lot going on the lot slope, which is going to add to the cost of construction. I talked about inaccurate records. Make sure the records are accurate. Do your due diligence, and I suggest this before you forward it to your clients. Now, sometimes you can't catch everything, and your clients don't expect to. That's why you have a due diligence period. But most of the offers that we write on properties, I'm going to say that we usually do a 3 to 5 day due diligence period for the physical property, and then we just ask for an extra few days for the soils report, because that's important to us. But if you want your offers, the reason why we get a lot of our offers accepted is because our clients are always willing to move forward quickly when they identify the investment they want to buy. Right. And that doesn't mean move forward quickly and actually buy it. It means move forward quickly and do your due diligence so you can decide yes or no. Okay. Expect rain and weather delays. Fortunately, we live in California. This doesn't happen often to us, but it does happen. So deciding when to break ground is important. Utility delays. That's an interesting conversation right now. Used to be a good old boys network where you knew somebody at the utility company, you can get things done. Now everything is done online in a queue. And sometimes gas company tells you they can be there in 5 weeks, 6 weeks. This is after your times, they'll be there in a week. So, sort of like if you're coming to the end of your remodel or of your new development, get that stuff in play. Now, the interesting thing is if you're putting new gas in, the city will not allow the gas to turn back on until they get their final. So just be aware that there's a utility process and a few days after you're done that you're going to have to go through. Look at the on-site issues. If I can put this picture in your mind for a moment. You're building a 2-on-a-lot townhome in North Redondo or a single family in Manhattan Beach, up on the east side of Manhattan Beach, or you're building a large home on the Strand or by Highland and 23rd Street. The on-site issues on the lot on Highland and 23rd Street are going to be much different than the on-site issues on the property up in North Redondo or the property in Manhattan Beach. And what I mean by that is where all the subcontractors going to park. Where are you going to put all your material? There's a lot of material that goes into a project. So on 23rd and Highland, those lots are only about 2,700 square feet. Whereas the properties in Manhattan Beach, 7,500 square feet, 6,000 square feet, Redondo, 7,000 square feet. There's all kinds of room on the lot to put your material. But if you have a real small spot, you have to figure on your on-site issues. How are you going to work that out? Surveys and soils reports, not hard to do. A survey takes a few weeks. Soils report takes a week and a half, 2 weeks. If I can provide information to you for surveyors or soils engineers, just let me know. Easements and other restrictions, that's something very critical to look at. Sometimes neighbors have easements in other neighbors' properties. In one situation, we did a 6-unit project in Redondo Beach off of Garnett and Prospect. You can actually Google the point at Garnett, and there's a YouTube video there. There was 3 lots in a row. 2 sisters inherited from the father. The 3rd lot in had an easement through the other 2 lots in the back to access the garage. If that easement wasn't there, you could build 2 more townhomes. So what we came up with a plan was to offer the sister to build her a garage in front and change her current garage into a art studio. And she gives up the easement. So that cost about 150 grand. She said, okay, she loved it. It cost about 150 grand, but it allowed the developer to build 6 townhomes instead of 4. So it was a profitable windfall, but there was an easement there that we had to work through. There might have, maybe she said no. If she said no, then the property wouldn't have been worth what it was because you could only build 4. So, okay, go to the next slide. Okay, understanding real estate financing. Let me see what time it is. Okay, we have about 10 more minutes on here. And we're going to talk about understanding real estate financing for a minute to maximize your acquisition and profitability. So usually we own a company called Value Mortgage. And I'm just putting this out there. They have a division called Private Loans Available. And there's a website called privateleloansavailable.com. So we can provide financing for our clients to buy investment properties literally in 7 to 10 days, $300,000 to $5 million. I've had clients buy apartment buildings. One client he had a chance to buy an apartment building for $5 million that was worth about 8. He needed the money in 7 to 10 days. He put up one of his other properties as collateral. We financed the property, closed the escrow in 10 days. My client got his 40-unit building for $5 million. Everybody was happy with it. So knowing where the money is and how to get the financing. I learned many years ago that if you had access to financing, real financing, that you can do a lot of business in real estate. Usually, a bank, they're going to underwrite you up and down. They'll want one of your kids and they'll want part of your arm, and then they'll give you the loan. With private financing, as long as the investment is solid and the money is secure, the capital is available. So an example, there was some office condos that came on the market up on Rolling Hills Road and Hawthorne Boulevard at the Peninsula Professional Medical Plaza. We bought it for $1.2 million. We used some private party financing to buy it because we wanted to close escrow in 10 days. We divided them into 3 units and sold them for over $700 a piece each. So the private party financing, the rate was 8.9%. There was a little bit of fees on there, but it made sense like no tomorrow because we were able to close it quickly. And that development was an 8-month turnaround and approximately $700,000 in profit. So there's a time and a place for financing. If you know where to get the financing, which we are a very good resource for, please keep that in mind. We're happy to, help you out and our clients out any way we can with that. Okay, let's go to the next slide. Okay, I thought it was important to make sure, go over financial summary one more time, because on this analysis, we did a $300 a foot and we did a $350 a foot analysis. And on that $300 a foot analysis versus the $350, the profit margin went down about 28%, 30%, about 30%. What if it costs $400 a foot? If it costs $400 a foot, there is no profit. So when we're doing our financial projections, we have to make sure we're pretty close, because the difference between $300 a foot and $400 a foot is the $800,000 in profit or $1 million in profit. So that cost per square foot summary is vitally important up front. If you know the acquisition cost and you can pinpoint pretty close to the construction cost, the profits are easy to figure out. Okay, let's go to the next one. Okay, so we're coming to the conclusion of this presentation, if you will. I hope it was helpful. interestingly enough, I have a YouTube video out there called The Theory of 10. If you Google Dean Thomas Real Estate and put up The Theory of 10, look for that video. It will show an investment strategy that a lot of my clients utilize. It's a 3-minute video. Unlike this long-winded video, it was a 3-minute video. And it shows you the benefits of building a real estate portfolio. It's very interesting. It takes about 3 minutes. Matter of fact, we'll probably send the link out for people to review, but check it out. It will show you that if you invest in real estate and buy real estate in groups of 10, you will easily, I don't mean 10 at a time, I just mean build a portfolio. You'll see the long-term and benefits of that. These are some of the services that we offer at eReal Estate Corporation. I look forward to seeing you guys soon in the future. I am doing a class or one of these presentations once a month. And the next month will be on investment finance and ways to acquire real estate on leverage. Okay, thanks a lot for tuning in and enjoy the day.